For Finance. Good afternoon. Mark, do we have any public speakers?
Yes, we do. We have 4 speakers.
Okay, let them begin.
First speaker is Christopher Greif.
Good afternoon, Christopher D. Greif, which is here in person. First, I want to thank MTA. As we are now getting elevators, we'll be coming to the stations in the borough, so thank you. But as we're talking about finance today, I'd like to remind, as we do the finance in the future, let's remind that reduced fare needs to make sure it's on the record that $1.35 must stay where it is. And then when we do the Omni procedures, the monthly must stay where it is, because customers who are senior or disabled or low income it's easier for them for their Social Security, SSI or SSDI can afford and budget where they have to go in the 5 boroughs and the border of Nassau and Westchester. It is very important. And when I say 5 boroughs, that's also Staten Island as well. It's very important that it stays, with the monthly, and I'm glad we have the weekly still, even better, because it does give people to balance their Omni card. But I still like to remind that the reduced fare price needs to stay where it is, and more information, if any fares changes in the future, please make sure always have the reduced fare price on. In the past, it has not, but I like to remind that reduced fare prices for seniors and people with disabilities is very important to all of us. So therefore, we can make sure we budget our bus and subway where we have to go, including Access-a-Ride as well. Happy holidays, everyone. Thank you.
Thank you. The second speaker is Lisa Daglian.
Hi, this is how I'm getting my steps today. Good afternoon. I'm Lisa Daglian, the Executive Director of the Permanent Citizens Advisory Committee to the MTA, or PCAC. The MTA's looming fiscal cliff is the elephant in the room, and we're all bracing for impact tomorrow when we hear more of the details. Comptroller DiNapoli released yet another alarming report today. It's worth taking a look at in advance of tomorrow's budget presentation. After proving in September that the MTA's budget gap is larger than previously thought due to lower post-COVID ridership, the Comptroller's latest finding is that the plan to save hundreds of millions of dollars through paying down debt and finding internal efficiencies won't be enough. Our state and federal partners will have to step up. Finding even more areas for savings without cutting service will be difficult, but elected officials, riders, and advocates know that it's possible. It's also important that the MTA finds and proposes new ways to raise new revenue sources in more creative ways than fare hikes. We and our partners in advocacy will continue to push our elected officials to fund transit like the essential service we all know it is. But we need clear, transparent numbers from the MTA and your inside knowledge of what funding streams could work best. Our elected leaders hold the key to a fully funded transit system, but we all need to help them unlock it by making it clear specifically what needs to be done to provide good service to riders. We've been doing that research too, and know that the MTA is not getting its fair share of state or federal funding subsidies, especially when compared to transit systems around the country. That needs to change, and we'll continue fighting until transit is fully funded. We're looking forward to hearing more tomorrow about your solutions for closing the budget gap, but it's clear that paying down debt and finding efficiencies won't make up the difference. We need a new funding paradigm for transit, and setting riders up for a better ride in the coming year starts with the information and the proposals you share tomorrow. Thank you.
Thank you. The third speaker is remote, Jason Anthony.
Thank you, and hello to the Finance Committee, Jason Anthony, here from the Amazon Security Golden JFK here in Staten Island, New York. Sounding the alarm that I spoke to the New Jersey Transit Rail Operations Inc. and to the Port Authority of New York and New Jersey these past couple of weeks. And they don't want to cooperate with the Metropolitan Transportation Authority to come up with a solution to come up with a solution to come up with a fiscal solution. Let's say alleviate with a solution to the congestion pricing. So it turns out that near the Port Authority and the New Jersey Transit Corporation is not in the same page as the MTA. So we need a new source agreement. In other words, a gas tax, or we need to charge more in terms of those who need to ride our beloved system. So we need to consider another alternative. So I'll see you guys tomorrow, same place. And let's think outside the box.
Thank you. The fourth and final speaker is Charlton D'Souza, who signed up as remote, but then I heard he might be here in person.
I'm remote. Good afternoon, everyone. Charlton D'Souza. I'm the president of Passengers United, and this message is for Mark Young, and the board, obviously, and the chairman. So, guys, very important. We need a city ticket now that Grand Central Madison is opening up, and you also have people going on Metro North who might want to connect to the Long Island Railroad. Maybe we should have a city ticket for $5 that can do that, that can get them there. So I think it's an excellent idea to have one unified city ticket so you can go from Fordham Road in the Bronx all the way down to Jamaica in Queens. I think that's going to be excellent. The logistics of it, I'm sure you can work out with technology. And one thing that people have asked me, how come if people use the mobile app, they're not getting a $3.75 discount? So the reason why Sarah Meyer made the fares $5 is because it was easier for the vending machines to process the $5 and not give change. However, on the mobile apps, you guys can make city ticket $3.75, or you can have a weekly ticket for $40. I can see that happening. I think that would be a huge win-win for everyone. So the reason why I'm saying this is because even though you're going to have to raise fares and cut service, and I have a feeling a lot of service is going to be cut, this is the way that you can sort of mitigate that by letting people use the new rail access into Grand Central. So I think it's a win-win for the community. It's just up to the board members and the governor and our elected officials to step up and take the leadership. And one thing we're calling for at Passengers United is 3 transfers overnight, because a lot of times the buses, what happens with the buses is, it misses the subway connection. So there should be, 2 or 3 transfers built in overnight, because if there's a general order and the train is late, that means you have to pay an additional fare on the bus, and that's not the customer's fault.
Thank you. If you could please wrap up your remarks.
I'm wrapped up. Sorry about that. I didn't see the countdown clock. Thank you.
This concludes the public speakers.
Thank you, Mark. So just as a quick remark about our agenda, this is a relatively truncated board meeting today. We're going to handle budget and obviously the current budget and the future budget tomorrow in a substantive conversation, the board meeting. So we can certainly talk about that, but the agenda for tomorrow is effectively the agenda of what this committee stands for, which is the existing and future budgets. Just want to be clear about that so you don't feel an anticlimactic sense when you finish this meeting and said, as they said in the 80s, where's the beef? There will be ample beef tomorrow. So with that said, can I have a motion to approve the minutes from the October 24th meeting, please?
Andrew, any issues? Yes. Okay.
One.
At the
Okay,
top
well,
of-
can I get a motion?
Yeah.
A second.
Motion.
Then you can comment,
Sure.
and then we'll vote. That's classic Robert's rule, so let's just finish that process. May I have a motion,
Or
please?
need-
Motion.
Second, thank you. Any comments, corrections, deletions?
Yeah, the top of page
Please.
11 is missing a word. It should say that he did not have that specific answer. That's all.
Okay, anyone else? All in favor, say aye.
Aye.
Opposed, abstentions, motion passes. Thank you very much. Okay, Mark, Budget Watch, please.
Okay, you asked for some brief comments. As you just said, it feels like a very small hors d'oeuvre compared to the main course tomorrow, but you did ask for some brief report on October results year-to-date. And what we saw in October is similar to what we've been seeing for most of the recent months of the year. Farebox revenue exceeded the forecast by 3.7% in the month of October, which was $13 billion. And that's primarily due to the average fare being higher than we had budgeted initially and in the forecast. Year-to-date, farebox revenue is $151 million above the forecast for the same reason. On toll revenue, we continue to see actuals matching close to the projections, and we're $14 million above the forecast year-to-date. Moving to expenses, operating expenses, they were $40 million below the forecast in October, and year-to-date, they're $447 million below the forecast, again, consistent with what we've been talking about the last few meetings. You see, similarly, payroll spending below budget, primarily due to the existence of vacant positions, the budgeted vacant positions. On the overtime side, we are continuing to see spending above the forecast, which is primarily absentee and vacancy coverage in New York City Transit. Non-labor expenses are $365 million below the forecast, and that's a combination of timing of payments, materials usage, and some actual real savings. And as we've mentioned, November plan will be discussed tomorrow by Kevin, CFO Willens, tomorrow.
Any comments or observations from board members? No? All right, great. Pat, Finance Watch, please.
Thank you, Mr. Chairman. Finance Watch is on page 20 of your committee book today, and I have a few things to report. 2 refunding transactions, 2 remarketings, and 1 fuel hedge. The first refunding used the payroll mobility tax, or the PMT credit, to refinance 3 subseries of transportation revenue bonds that were floating rate tender notes, or term rate bonds, and also to retire some outstanding transportation revenue notes, TRB notes, Series 2019F, that were due to mature on November 15th, 2022. This refunding was primarily a tool for debt portfolio management. However, the TRBs that were due for remarketing resulted in about $64 million of net present value savings. The second refunding is currently slated for next month, for December. We'll also use the payroll mobility tax credit to refinance $800 million of outstanding MTA transportation revenue bond anticipation notes, and those notes mature February 1st, so we want to take care of that before that maturity date. And this issuance will be priced through a competitive method of sale. The first remarketing is for $146 million of existing variable rate bonds, and we're using a letter of credit with BMO Harris Bank serving as the new liquidity provider. This letter of credit provided by BMO Harris expires in 2025, October of 2025, and our exiting bank here was Landesbank Hessen-Thüringen, which is also known as Helaba Bank. Helaba Bank is exiting the municipal market here in the United States. The second remarketing is about $148 million of existing variable rate bonds, where UBS AG will come in as the new liquidity provider in place of exiting bank, Bank of America, NA. Lastly, in October, we laid on a new fuel hedge for 2.8 million gallons of ULSD, and we locked in a price at $2.74 per gallon. And that's our Finance Watch today. Happy to take any questions.
Questions, folks? So, Patrick, I think it'd be helpful, just given that rates are bouncing around and you're sort of our municipal funding expert. Can you remind us, A, what what percentage of our bonds are fixed versus variable? B, can you just give us a sense of, what the markets are doing now? And maybe C would be helpful just to remind us then what's our total true in cost on our capital these days. I think it's just good for this committee to
Sure.
understand what's going on. I'm sure people think about the markets from a mortgage perspective as consumers.
Right.
Those of us who are in business that uses financing think about it as well. But I think it'd be good just to get in the habit. I know you have this great chart in the exec sum, but I think it'd be just good for us as a matter of course to let everyone understand the weight of the rates to us. So if you wouldn't mind just some discourse around those three questions, it'd be helpful.
Sure, be happy to. Well, as you may recall from our January presentation last year, we are predominantly a fixed rate issuer. So most of our outstanding debt represent locked in fixed rates. And that's obviously a good thing when you're in an escalating rate environment like this. So we're in call it the 90% range fixed versus, smaller amount of variable. And we also have some, what we call synthetic variable debt as well. So in an escalating rate environment like we're in, being predominantly fixed is really a good place to be. One of the things we watch is what happens with the Federal Open Market Committee, or FOMC. Most recently, they just voted to raise the short-term interest rates by another 75 basis points, and that continues their efforts this year to continue to increase rates. What was notable most recently is that the minutes of that FOMC meeting, which were recently released, indicated that the board is concerned about inflation and the growth of inflation in the marketplace, and there's a consensus on the street now that the Fed will go for another rate increase next month, but the consensus is that it would be a lower increase of about 50 basis points rather than 75. So we'll see what happens in December, but it appears that the FOMC is signaling a slowing down of their rate increase activity this year. That's a good thing. As we have observed this year, a lot of money has gone out of the municipal market, and we characterize this as inflows and outflows, and it's people putting money into bond funds, et cetera. What we've seen is year to date, there's been 112 billion exit the municipal market, and so that presents challenges for issuers like the MTA. The good thing is we're currently not issuing large amounts of new debt. A lot of our transactions are remarketings that I just reported and refundings. But that dynamic of investment dollars exiting the market presents a big challenge that we're working with our advisors and our underwriters to overcome when we come back into the market. We've seen a return of opportunistic buyers in the market, and when we need them, they're there, and that's good. We're happy to sell our bonds to anybody that's willing to buy them at a price that we're happy with. So a little bit on the market there, Chairman. I don't know if that gets to the heart of what you wanted to.
I think it does. David, please, and then Jerry.
Yeah, I just want to know what do you attribute the outflow to?
Well, the outflows are a reflection of broader economic conditions that investors see opportunity elsewhere. And other asset classes.
Okay.
Jerry?
Yeah, what interest rate were we getting on what we're retiring versus what we're, I guess, remarketing?
Sure. So,
I mean, how much? I imagine it's a higher rate now, right?
Well, the interesting thing about remarketings is that as we've seen volatility come back into our market this year in a big way, we've seen a lot of fluctuations in short-term rates. For example, our daily and weekly resets were north of 2% just a couple months ago. They've recently come back down under 2%. So that dynamic is going to continue to be with us. I would characterize that as volatility, short-term volatility.
Midori, please.
Thanks, Pat, for that overview. Can you give us a sense of, based on the operating revenue that we're bringing in, what is the percentage of that revenue that's going to service debt? And maybe just a reminder about where we are on debt service in general?
Sure. So in the In the committee book on page 79, there's a table that gives a good high-level summary of all of our debt. So to your question, the transportation revenue credit, which is a gross pledge of available revenues, including fares, residual tolls after meeting TBTA's needs, and residual dedicated taxes after meeting the dedicated tax fund needs, year to date through October was 1.489 billion. About a third of that, I would say, roughly, it's roughly about a third. It represents your fare revenue when you look at the overall the overall revenue picture of the MTA.
So does that mean that a third of the 1.4 billion, that's the fare revenue, that's what's going to service debt from that just specific fare revenue
From that
standpoint?
specific revenue, yes.
Okay.
We don't think about it that way because remember this credit's a gross pledge. So
Exactly,
any
yeah.
available dollars
Right.
must first be applied to meet our debt service requirements before then they become available for operating purposes.
And what's our percentage of budget for this year on debt service?
So I believe we're right around 20%, little lower than 20%.
Okay.
You're talking about the debt affordability statement,
Yes,
which
I'm
will be
sorry,
in the
yes.
financial plan tomorrow.
Okay, okay.
And that's about 20%.
Thank you. Jumping the gun. Sorry
okay.
about that. Okay, thank you.
Yeah. Go ahead. Yeah. We were, when I first started on this board, looking at 16%.
Absolutely.
So we have seen a substantial rise.
Well, we've had COVID, and we've
Yes,
had
no, I
a
know. I'm not
substantial
blaming-
drop off in revenues. So the debt service stays the debt
fixed
service, and the
against,
revenues. So we are soaking up more revenues for debt service as a result.
Is there a sense, and this is just an idea, obviously the city caps its debt service rate at about 15%, mandatorily, I think, statutorily. Have we ever discussed that we may have to cap our own debt service growth at some point in the future?
Well, we're a rather different entity than the city of New
understand.
York,
Yeah.
I think we've reported on our debt affordability for a number of years. We continue to actively manage the amount of debt service that is needed in the system. But remember, as we lay on additional debt service, we're fulfilling prior commitments, prior capital plan approvals.
Right.
And so we do that as efficiently as possible and when needed, not before it's needed. So.
Let's get our CFO in.
Yeah, just quickly, again, we are trying to keep the debt service percentage down. It'll be, we think it'll be in the 17 to 20% of the total budget over the coming years. Again, realize we're only issuing debt for capital. So when the capital programs get approved, there's a certain amount in there for MTA bonds. And then as the projects have to be paid for, we have to issue bonds. The one benefit we have with the 20 to 24 capital program is that, first of all, the amount of MTA bonds that will be issued out of the $55 billion program is $7 billion of MTA bonds and $3 billion of Triborough bonds, so a pretty small percentage. That's why congestion pricing is so important, because congestion pricing, all the capital lockbox dollars, the increased IIJA money, the commitments from the state and the city keep that amount down. And we've recently negotiated where the state and the city are funding their commitments on a much more accelerated basis than the past. So that allows us to hold off on issuing debt towards the latter part.
I wonder, and as a follow-up, is the board going to get briefed on the latest status of congestion pricing?
It was not planned. Feel free to ask questions tomorrow. It's not part of the.
No, I'm not trying to.
It's not part of the financial plan presentation because it's capital items. But I think that it's the same, waiting for the FONSI out of the federal government.
Jerry?
Okay, I know we don't have an established cap, but can I ask you, what would you be comfortable with? What is the top limit. For some reason, I thought I'd heard somewhere in the past it was at about 20%. Are we like entering the danger zone, or?
Well, I think we've been in and around this level for a long period of time. When we look at our financial picture, part of the challenge is that, with the drop off in ridership and loss of fare revenue, whether it's debt service, which is fixed at about, we call it over under $3 billion a year. And then we have retiree health costs, we have pension liabilities. So we have all these fixed components of our cost structure that don't change based on ridership. So that's part of the financial challenge that we're trying to address. I guess the way I look at the debt services, rather than a fixed percentage of the operating budget, I look at how is debt, how do we want to limit debt service from, growing from year to year? Because when you think about, if in normal times, if inflation is 2 or 3% and your taxes and dedicated subsidies are growing 2 or 3%, if your debt service is growing a lot faster, that's going to add to the structural deficit. So, what I look at is over the long term, when we look at our funding commitments, can we keep debt service growth under a 3% annual level? We'd like to keep it lower. I'd love to have it contribute to solving the budget problem rather than just being kind of neutral. So at least that's how I look at it. So whenever we look at, and I think when we develop our next capital program and so forth, you really need to kind of model out, how much are you committing in new bonds, and what does that mean for the growth in debt service? Because if it grows at 5% and your overall budget's growing at 3%, then the debt service is going to chew up a bigger and bigger portion. Where if you, yeah.
I'll just add one thing, which is I think that's a great view from the input perspective. David has been raising this topic since he joined the board. No, and I mean that as a comment of thoughtfulness, because it is an important question. And I think the thing we can also think about, which we haven't talked about, is the output side, the buying side of debt. So we have a strong rating. We have a consistent delivery to the investor community. We are transparent about what we can and do, and we are revenue back, so it works for that given all the bridge revenue. So the reality is that the marketplace likes what the MTA has been doing, and I think similar to modern monetary theory they talk about, at some point on the back end, if the market doesn't like what you're doing, you'll have a very clear sense. For now, we have a pretty good sense of what we're doing. All right, any other questions on the debt? Thank you, Pat, for that commentary. Let me just draw your attention to 2 action items we have today. The first is a perfunctory list of mandatory payments from the city and suburban counties for station maintenance. Does anyone have any comments on those? I suspect not. The second is an opportunity for comment if you'd like. It is on our Finance Committee charter. The charter is relatively clear for what a finance committee does, and this one in particular. We are to review the existing and the future budgets. That's what we do. It's on page 35 of your hymnal, if you're interested in looking at that. The governance committee, which I'm not a member of, apparently reviewed it earlier today. I don't know if anyone attended that governance committee. Well, obviously our general counsel has. Anyone have any comments they want to share from the governance committee about the finance charter? There were none. Okay, well, they're satisfied.
They were largely unchanged.
Okay, unscathed. Anyone from this group would like to comment on it? If you read it over the weekend, over Thanksgiving, it's worth noting, and I will use the moment to take the mic for a second. What we're responsible for. I think this is a infrequent topic, and we might as well just look at it for a second since we're all here. So if you'll excuse me for a moment, I'll just read this to you. Our key responsibilities, I know you're loving this last meeting, aren't you? It's fantastic. Right? Your dog would have loved this if we let him join the meeting. It would have been great. Anyway, our job is the following: to review the budget. I said that, right? Ensure the MTA operates on a self-sustaining basis and with support from various levels of government. We monitor our compliance during the fiscal year towards that budget. We review the financial requirement of the capital plan, which is what Pat and Kevin were just talking about. We review annually the proposed plan to meet the financial requirements of the capital plan. We review any proposal related to the incurrence or repayment of material indebtedness. We work on procurements, obviously. We oversee the operations of headquarters, interestingly enough. That's the purview of this committee. We overview the First Mutual Transportation Assurance Company, the insurance captive of this organization. We review insurance policies. We manage and oversee the pension plans. And we make recommendations to leasing and the acquisition of real property, as well as which we'll come to in a bit from David. So that's what we do. Anything surprising to anybody? No. Okay, fine. We have no motion to take in that, but well, I don't know if I do it, but this organization does it well. You guys do a great job. Okay, onto the mellifluous voice of Kavesh for procurements, please.
Thank you, Mr. Chairman. Good afternoon, Commissioners. There are 4 actions for Finance Committee approval this month in the amount of $499.7 million. These actions are found in the November 22 Finance Book on pages A to E. The first action is the award of a contract to Prutech Solutions Incorporated, a New York State certified minority and women-owned business enterprise, to provide staffing support to support the Transit Adjudication Bureau with its functions and responsibilities under supervision of New York City Transit. This contract is for an estimated $31,979,000 and is for a period of 5 years. This, just for the edification of the board members, the Transit Adjudication Bureau was actually set up under Public Authorities Law 1209 and basically administers where riders or people in the system receive summonses and tickets, and they can come to this adjudication board, and this contractor oversees the administrative, the collections, the overall non-armed security supervisory staff. So I think this is also quite a significant amount, and we're quite proud to say that it's going to an MWB firm. And I will take any questions if there are any.
Yeah, David, can you put your mic on, please?
Sir.
Been a relatively sharp drop over in this quarter of essentially the net take from the Transit Adjudication Bureau from tab summonses that have been issued for fare evasion.
Commissioner, I'm not too sure on those actual numbers in terms of that.
I'm sorry, I should have highlighted in the book.
Yeah, but
yeah.
you know, we could get back to you on that drop.
Yeah,
yeah.
It's a question of the yield. How many of the tab summonses are actually that people come in to pay?
Yeah.
And I've been arguing for a long time that many people couldn't pay the $275, and to hit them with $100 is sort of a joke. But it seems to be borne out by a relatively low receipt rate after giving a tab summons. So,
Okay.
but that's not your problem. I'll take it up.
I will refer that back to the program.
Okay, sure.
Thank you.
Commissioner, we can get back to you. That's in the Transit Committee book. Yes.
Trying to make up, obviously, for the loss of fare evasion. If the tab summonses aren't doing it, you know, what are we doing? Okay, sorry.
Hi.
Okay, great. So it's a $30-some million contract over 5 years. How many staff are we talking about? Because as I understand it, it's staffing support. So how many people will the MTA get to do the work of the TAB?
So it's over a large amount where there's various duties. There's administrative, data entry, quality control, adjudication support, payment processing. So I'm just going to turn to Lou Montanti. He may have.
I don't know that number specifically.
Yeah. Okay, we could come back to you on that number, but it's an overarching, staffing support across the board to basically maintain that service. I'll get back to you on that number.
Yeah, it's just about trying to understand per capita, right? Like how much are we really paying for staff support versus going in-house or using another firm? I was just curious. Thank you.
Okay, thank you. Thank you.
Keep going, Kavesh.
The second item is a 13-month extension to a contract with Caremark PCS Health LLC, and this is CVS Healthcare as we know it, to continue to provide pharmacy benefit managed services for active New York City Transit represented employees, retirees, and their dependents. And this is in accordance with collective bargaining agreements. Just the total number of these members in this pharmacy managed care is 150,000. The amount that we are requesting for board approval is $425 million, and that's for a period of 18 months. We're asking for this contract extension, and it's necessary because it'll give us enough time to go out and solicit a competitive RFP early in the next year. As you would know, this is a very complicated procurement that involves consultants doing actuarial assessments. So, that's exactly what we would need. Takes about 10 to 11 months to do. I wanted to take this opportunity to break down, and you'll see on the screen how we get to that 425. So in 2019, the board approved a 3-year contract from June 1, 2019 to May 31, 2022, and that was in the...
Can I interrupt you? Is everyone clear what he means by a pharmacy benefit management company? Anyone want? Okay, fine. Could you explain the services first? Because I'm not sure everyone gets exactly what that means, please.
So to put it simply, if you have if you go to a doctor, he gives you a prescription, you take that prescription, and you could either go to a Walgreens or you go to CVS or some Rite Aid. So in this case, it's CVS. What they do for us is twofold. One, they actually manage and administer the prescribed pharmacy benefits program for and on behalf of the MTA, but also they are the one that provides the actual prescribed medication. So what happens is this is a self-funded program by the MTA. We cover those funds based on the collective bargaining agreements we have with the unions. Specifically in this case, it's now 150,000 members under New York City Transit. So the cost is the cost of the actual medication, and a very small percentage is actually the administrative cost related to this program itself. Okay, so on that note, the $944 million was over 3 years. So when we got to May 31 of 2022, we looked at the actual spend, and the actual spend was $852 million. What that actually meant was we had a $92.6 million balance. We extended that based on that balance, and speaking to our consultants, we extended that contract until the end of November. When we go back and look, we see the actual spend over the last 6 months from 1 June 22 to November of end of this month is $149 million, which in actual fact meant we had a deficit of $56 million. The 149, you deduct your 92, which is your balance that you had, and that's how you get to the $56 million, which effectively brings this program, which is a rather large program, to $1 billion. If you take that, the extension that we are requesting now for 13 months, the estimated amount based on the actuals that we have seen covering us for this period of time and into the next 13 months are estimated at $368 million. So you take the $368 million and this 56, and you get the $425 million. That is what we are seeking board approval for this month.
Questions, please.
Is this all MTA employees, including yourselves, or is it just?
No, this is New York City Transit.
Just transit employees?
Just transit.
And retirees?
So it's active employees, the retirees, and their dependents.
Okay, but only transit,
Yes.
no railroad, nobody else?
Nope, only transit.
Hi, Maggie. How are you? Nice to see you again. Thanks, Maggie. Okay. So how many, so it's transit representative, so how many people are we saying, 150,000?
150,000.
Okay. And who takes care of everybody else's pharmaceutical costs?
The residual of our folks are covered by the night shift plan.
Okay.
The night shift plan has pharmacy benefit as well as mental health and others.
Got it. Okay. Thank you. Thank you, Maggie. Thank you.
Others?
I have a question.
Please.
This is competitively bid.
Yes.
Did you have other entities? Because it seems.
This is not, we're doing an extension of an existing contract to allow them to go to bid for a
Thank you.
future contract.
Thank you, Neil. I saw competitive checked and I was going on that. I got it.
Sorry.
Because I would think that whoever gets this contract, it is a benefit for them as well, right?
Correct. Yes.
So originally then.
Originally, it was comparatively solicited, and now that's the very reason why now we want to do an extension for the 13 months, so that gives the HR benefits team and the procurement team the time, together with the consultants, because we have to utilize external consultants, to put together a competitive RFP, and we'll start that early next year. It'll probably take us about 10, 11 months, so we should come to the board towards the latter part for an approval of a new comparative RFP and the award of that.
Thank you.
Thank you.
Others? Let me just make a note here that I am glad we are using competitive process for something this big. Clearly, it benefits from it, and while it may be, we may have an allergy to extensions, and we should, to extensions of existing contract, this seems like a rational reason for it. So continue, Kavesh.
Thank you, Chair. Next, we have a modification to extend a contract with TDX Construction Corporation to provide mentoring services for the MTA Small Business Mentoring Program for 15 months. The extension period is going to run concurrently with the Small Business Development Program contract, which was issued to TDX as well in 2018. During this time, a new solicitation will be issued that will combine both the services of the Small Business Mentoring Program and the Small Business Development Program under one RFP. And the reason we are doing this and asking for the extension is that when we had our procurement teams do some analysis in terms of the competitive nature out there, we were getting very limited responses if we had to do competitive solicitations for each of these programs. So in consultation with Michael Garner and the team, we decided we would combine this and then go out on a competitive procurement to ensure that we get more companies that will then give us proposals, thereby ensuring we get competitive proposals and effectively and hopefully lower costing. And the fourth and final
If you don't mind, Kavesh, I just have a question on that. With regards to TDX.
Sorry, Commissioner.
They have been historically the mentor service provider for the MTA, if my memory serves me right, for a number of years.
Correct.
And now this is coming out with a new procurement. Do you happen to know, and if you don't have the answer now, it's okay, if TDX, because this is a program to benefit smaller firms, M&WBE firms, do you happen to know if TDX has M&WBE goals within their contracts as it relates to this
I suspect
service?
they do. I'll get back to you on that,
Thank
but
you.
I suspect they do.
Thank you.
Okay, thanks. And then the fourth and final action is a ratification of contracts that have been awarded pursuant to a COVID-19 immediate operating need. And this was a declaration per the all-agency guidelines to address the need for COVID-19 related emergency contracts. Under this immediate operating need, we had 5 contracts were awarded totaling $39 $1,244,000, and 4 of these were for the supplemental paratransit accessoride program in the amount of $18,900,000. Related to this program, what we founded and why we declared this immediate operating need. During COVID, we found there was a massive shortage of resources, especially drivers. And in order to ensure that the accessoride program remained at the service levels that we were continuing to provide, because we didn't want to deny anyone a ride, we then employed 4 separate companies to bolster the drivers that we could then send out to support this program. And the second contract that was awarded, which I think everyone is very familiar with, is the one for our COVID vax or test program. And this was awarded in the amount of $20,343,000, and this was to Mount Sinai. And to refresh everyone's memory, we were actually doing about 25,000 tests a day. So we are seeking board ratification for these contracts.
Okay, any questions on the immediate operating need ratification?
Thank you.
Thank you. Paige, can I take those all as one single vote? Are you okay with that? Okay. Can I have a motion, please, to accept the procurements? Thank you, David. Second.
Second.
Thank you. Any comments, questions, or issues? No. All in favor say aye. Aye. Opposed? Abstentions? Thank you very much. Motion passes. Kavesh?
Thank you, Chair. Just 2 more points. One is there was an information item that was approved by the Metro North Committee, and that's in the committee book for information. And there were 5 information items that were approved this morning by New York City Transit. That's also in your books. There are no other procurement items. Thank you, sir.
Any comments on the bus procurement or anything else in there? No, I think that's been exhausted in the Transit Committee. Okay, thank you. We have our consolidated reports, financial and operational. I don't know if anyone has any questions on those, ridership, et cetera. Okay, I thank you for the exhibit you're attaching. I personally think it's actually quite helpful seeing this. This is the one that's called Exhibit 1 in your board books. It compares 19, 20, 21, and 22 revenue passengers for all our lines. Again, as I've said before, I think it helps to look at 19 as your mark. That this provides you both the month-to-month, so September versus other Septembers, and year-to-date, so you can track along with how we're doing on our driver of revenue. Okay, so that's that. Real estate, David, please.
Thank you, Mr. Chairman. Real estate has 3 action items for consideration and approval, beginning on page 111 of the agenda. There is one item for the Long Island Railroad. It's an authorization to acquire property interest by negotiated settlement or eminent domain for Phase 2 of the Jamaica Capacity Improvement Project in Queens. The second and third items are for MTA New York City Transit. They include the eminent domain procedures law, determination of findings in connection with the acquisition of property for the Jamaica Bus Depot Reconstruction Project in Queens, and also a lease extension with Raisin Realty for warehouse space in Glendale. There are, in addition, Mr. Chairman, 3 information items, and I'm happy to discuss any of the foregoing.
Okay. Any comments or questions on these real estate items? No, hearing none. May I have a motion to approve them, please?
So moved.
Second. Any comments, questions? All in favor say aye. Aye. Opposed? Abstentions. Okay, that motion passes. Thank you very much. Any new business for the committee? Okay, motion to adjourn. Thank you, Blanca. Second. All in favor? Okay, thank you very much. See you tomorrow for our budget discussion.